strategy that I'm about to teach you in this video is literally 99% accurate, and I guarantee you it will change your trading forever. But you have to apply what I'm about to teach you in this video or it won't work. And yes, you can use this strategy as soon as tomorrow. Before we get started, if you guys want to level up your trading, check out my website. It should be on the screen or there should be a link in the description. I have live trading that I offer. I have a Forex course that is great for any beginner trader, or I offer one-on-one mentorship. And lastly, if you guys could show some type of love, like this video, drop a comment, or subscribe if you haven't already. And one more thing, check out my channel. I have a ton of other videos based around trading, and I also have videos based around US30. Now, without further ado, let's get into my computer. Alright guys, I have been very fond of NAS 100 lately, but before I started trading US30 very seriously, and that was my #1 go-to, I actually preferred NAS over US30, and I'm diving back into NAS, just seeing what's good. But the cool thing about looking at NAS 100 and US30 is there might be days where US30 just does not have a clean setup. And lately, if we look at US30, it's been doing these very aggressive stop hunts where it will push up at first and then it will drop down like 2,200 pips. And with me, I have a pretty big stop loss, but I've been getting stopped out a lot with US30. And if we look back, we can see, boom, it just shoots up at the market open, then dumps. So lately, what I've been doing is I've been looking at NAS. The thing that I like about NAS is it doesn't really have these aggressive stop hunts. So we can see that it did drop about 1,000 pips, but it's not dropping like 2,000 pips, 3,000 pips. So definitely look at NAS as well, guys. We can see that Friday was very nice. We had this Asia session consolidate a little. Then we had New York start to push up slowly. We broke the high of the Asia session right here. And then we came down to form a nice W pattern. And then we had this bullish candle at 615, 630 come out. And then boom, it immediately pushed up to this next level right here. But I want to go over the 20 EMA. But we need to add this to our chart. There's a difference between the 20 moving average and the 20 EMA. The only difference is the lines with the EMA are a much smoother than the moving average, but it's all personal preference. You could use the moving average if you want, but this strategy works best with the EMA. So let's go right here and type in EMA, get moving average exponential, and then we're going to go right here and we're going to go to the settings for it. Now the length is going to be 20. The style, I have it in yellow, and I like to have it on the thickness #2, so it's just a little bit thicker. I can see it a lot more clearly. So make it whatever color you want. You can have it pink, purple, whatever your color preference is. But let's go over what this EMA is used for, how I look at it, and how it's overall going to change your trading forever. Now this is a very specific setup, but I like to see a candle reject, meaning there's a wick to the EMA, and then it pushes up and closes as like a bullish or bearish candle. Or I like to just see a bullish candle like this. So the easiest way to know how this EMA works is if the candles are above the EMA, that's signaling a good buy. If the candles are below the EMA, that's signaling a good sell. But what I like about the EMA, and this really works at the market open at the 615 candle or the 625 if you're on the minute 5 chart. But when we're looking at this specific candle, or like the 6:45, 7 a.m., 7:15, 7:30, like any of those candles within the first hour of the market open, these candles are really going to give us a lot of directional bias on what's going to happen next. Like I said a second ago, NAS has not been doing these aggressive stop hunts. So check this out. We can see NAS had this spinning top right here and then just pushed away. But if we zoom in, I want you to notice, and I will show you guys more examples, notice how the body is right above the 20 EMA. So this is technically not like a really clean rejection, but we're pretty much saying, okay, the price is going to push up after this. But overall, what I'm looking for is the candle to reject the EMA. So let's go and find a better example and stay for the rest of this video because I got some major sauce for you guys that is going to make this strategy way, way easier for you where it's not going to be time consuming whatsoever. So we had right here the 530, it hit it once again, but then it stopped time. That's not really a good example. I know there was a really good example. Okay, here it is. So notice how we have that 615 candle closing bullish. Notice how we have this bullish engulfing closing above the EMA. Right after that, price starts to really push away to these next levels. That's a very good example. If you didn't catch this entry, here's your next entry right here. We got a spinning top. This is really what I like to see. I like to see a trend already being established. So I'm usually just looking at the previous two sessions, the Asia session right here. Then I have the London session that's not marked up. But notice how the trend is just going higher, higher low, higher high, higher low. So we have this higher low right before the market open at 615. Bullish candle right here. Then this candle comes out a little bullish too. But notice how we have this long wick rejecting the 20 EMA. Ooh! If you see the trend already established, it's forming higher highs and higher lows, and we wick the EMA like this and reject it with a strong bullish candle, you are going to see that thing completely fly, which it did. So that's what I'm overall looking for on this strategy. And it works the same with the 66. I just see it happen more frequently on the 20 EMA. Now let's see. Oh, once again, we have a perfect setup. So before the market opened at 615, we had this bullish engulfing, closed above the EMA. But if you miss that, here's that spinning top candle. Notice how it has this long, deep wick right here, and it's closing above the EMA. It does it 1 and 2 more times after that if you miss this entry. But what I'm looking for is some type of reversal candle, usually like a spinning top, because I want to see these long wicks rejecting the EMA, whether it's a bullish reversal candle or a bearish reversal candle. But I want to give you guys some feedback on what this actually is showing us. So let's zoom in so I can give you guys a really good lesson on candlesticks. Right here's the market open. After this candle closes, boom, 6:30 casino time, opening bell, ding, 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 ding. And then we can see this candle. Notice how it has this deep wick right here. Now we need to understand the logic behind that. And I'm not going to put my cursor over it because it'll block it out. But as this candle comes out, a lot of traders are like, oh, this is a reversal candle, but it's in an uptrend. And it doesn't make sense for us to sell when we're in an uptrend through these sessions. It's going higher and higher. Like, why would it drop there? It doesn't make any sense. But a lot of the beginner retail traders are really not smart. I'm not going to call them any names because I was once a retail trader, beginner trader. But a lot of these traders are like, it's going to sell because of this candle right here. And they're selling. Once this candle drops, sell, sell, sell. Because this candle, the wick, it looked like this red candle at one point in time. And all these traders, they're biting off it because they have FOMO, fear of missing out. And they're like, sell, it's going to drop, it's going to drop. So there are people that are selling right here, 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 here. All within this candle's wick. And the market makers are like, all right, perfect. We're going to trap all these people within this wick and sells. And then what we're going to do for the last half of the minute 15 candle is whipsaw to the upside. They're all going to have their stops right above this previous high. And then we're going to take them out right here on this next candle. And then they all get taken out. And all their money's taken. Versus with us, we're smart, intelligent traders. So we're like, do you know what? There's absolutely no rush. Let's just wait for the next candle to open up, because when you are in a specific trend, you want to see a higher low go with the uptrend. So you want to see some type of bullish candle that's going to go in confluence with that uptrend and that higher low to really give you confirmation that price is going to continue to go up. So understand that the trend is your friend, but you need to find the trend, and then you need to figure out, okay, where is this specific bullish candle that's really going to give me confirmation? And the easiest way and the most accurate way I've seen the market continue to go up is when we see a bullish candle reject the 20 EMA and just explodes to the upside. This strategy is so accurate, and if you go back in time, you'll see with US30 right here, rejected it, 630, 645, hits the EMA, drops down. Kind of hits it right here and pushes up. I like to see these really big runs. This is a good run right here. We can see the 615 or the 630, 645, hits it, pushes up. It's kind of choppy right there. But you'll see like right here, we can see boom, higher high, higher low, rejects our EMA right here, 20 EMA, and then pushes up. So I really like to look for smooth uptrending markets where just higher high, higher low, higher high, higher low. It's not like pushing high, then low, then high, then low, then high. It's just really smooth. So one more thing I want to show you guys. If you go right here and double click the EMA, or let me show you guys actually. If you go right here and you right click the EMA, you can add an alert to it. And what you want to do is add an alert to where every time it crosses it, it's going to, you want to put it on crossing the value, put it on EMA 20 like this, and then have it, how do I have mine set up? Let me see real quick. Once per bar. So you're going to have it set up to where, let me redo this for you guys. You're going to go to alert crossing 20 EMA and have it once per bar. So every time that a candle hits the EMA, I'm going to get a notification on my phone that's going to tell me that that candle's hitting that 20 EMA, and I can go look at the chart. I really have this set to where I'm only looking at that notification when it goes off at the market open. All the other times do not matter to me whatsoever. So take this strategy, apply it, see if it works for you. Obviously, you want to go back and back test it. And this works for any currency pair. I find that it works best with like Forex pairs, but yo, this works on the 1 hour time frame. This works on the minute 15, the hour 4. The 20 EMA is just a great tool to look for rejections in the market. Hope you guys got some type of value from this video. I will see you on the next one. Peace out, guys.